It's an interesting time. Definitely. It feels a little bit like in the markets, like when COVID kind of first hit and everyone's kind of looking around. I think long term, it's still a very positive outlook. But right now, what's been going on is we're seeing the Fed make these rapid hikes.
What's going on, Garrett?
What's going on, Michael?
What are we talking about today, Garrett? What do the people want to know?
Oh man, we're talking about some cool stuff with the multifamily market because it's all crazy right now.
Is it?
Yeah, good and bad.
It's good and bad.
So yeah, good and bad. So we've got what we got going on right now. I mean, we've got obviously inflation is just all over the headlines, nonstop news about inflation's going up, and then we've got our first tidbit of maybe negative news in the markets around interest rates going up. And it's it's an interesting time. Definitely. It feels a little bit like in the markets, like when COVID kind of first hit and everyone's kind of looking around. I think long term, it's still a very positive outlook. But right now, what's been going on is we're seeing the Fed make these rapid hikes. And so interest rates are going up. And what they're trying to do is they're trying to bring spending down. There's so much liquidity in the market. So they want to make money not so cheap anymore. They want it to be expensive so that there's less money in the markets moving around, causing all this inflation. And so they've decided to make these big jumps, the biggest since 94. Now, it does impact things like residential real estate. Really, let's just say they're raising rates by, last time I think it was 75 basis points. So that'll have a direct impact on things like car loans, on things like residential loans, just like private lending. But then when it comes to commercial loans, a little bit different. It does affect it, but it becomes baked in advance. So they already know that the rate hike's coming, and you'll see like the 10-year treasury or SOFR go up a little bit, and then maybe the spreads move out a little bit, but it's not exactly in tandem with whatever the Fed is saying. So it's good for us as commercial real estate owners. Now we knew this was coming at some point, so we can't be too shocked. But luckily we're in a really stable asset class. That's just really a great place to be because we're still hedging against inflation at a faster rate than the interest rates are rising.
Yeah, that's exactly right. So I think we're seeing some volatility in the debt markets specifically right now. They're trying to figure out what's going on. Plus, like you said, rates have moved really quickly in a really over a short period of time. So we're seeing some of our rate caps go up. We're seeing some retrading and by some of the lenders happening. So there's some volatility. It does remind me after 3-4 months after COVID, where some of the bridge lending went entirely away, right? And so during that time though, we did 2 deals, and I think he who finds the right debt is going to win and pick up some nice deals over the next 6 to 9 months. So in the short term, we're all trying to figure out how to get into a deal, how to underwrite it, things of that nature. But I think there's going to be a massive opportunity because currently there are more sellers than buyers, and that's going to benefit us as well. From a macro perspective, though, like you said, I'm really optimistic about where it's going, primarily because of inflation, right? In an inflationary environment, real estate is going to be king. And we saw in the last 12 months, inflation drove up our rents, and therefore, my gosh, the portfolio went up by like 40% in like 12 months. It's insane. Now, interest rates are going up. That is true. And so it's making it less insane. But before COVID, it was less insane. It was just, quote, hot. So it's just going to go from insane back to hot with slightly higher interest rates. So overall, as inflation goes up, it's going to continue driving up rents and therefore values. So I continue to be bullish on the market, but in the short term, we got to figure out how to get into the right debt product as well.